Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, we are from group 6. We are going to do a presentation about corporate and Sharia governance of Islamic banks part 2. The members of the group are me, my name is Susanti.
And my name is Mutia.
And my name is Putri Naila.
My name is Rizka Ferina.
And we are going to do a presentation about these learning objectives from Sharia governance model to Sharia compliance responsibility of BOD and senior management. Without further ado, let's start the presentation. Learning objective 2.12 Sharia governance model. Sharia governance can be defined as the overall system that manages the conformity of the activities of Islamic bank and financial institutions to the precepts of Sharia pertaining to the transactions. To this end, we propose a model that maintains Sharia compliance through structural arrangements that are both internal and external to the institution. The internal arrangement includes a robust internal Sharia control system, internal Sharia audit function, BOD, and related committees such as the governance committee, senior management, legal compliance, and internal audit functions. As for the external structural arrangements, it includes the Sharia Supervisory Board, external audit firms, Sharia audit and advisory firms, standard setting organizations such as the IFI specific and the AOIFI and the non-IFI specific such as the OECD, banking and industry associations, rating agencies, and indices. At the heart of institutional arrangements are the legal, regulatory, judicial, and legislative system, which play a vital role in setting the foundation for prudent Sharia governance and monitoring its functioning. These systems are crucial for passing Islamic banking laws that will take into consideration Sharia aspects, establishing and maintaining stakeholders' confidence with respect to Sharia compliance, maintaining market disciplines, promoting standardizations, establishing rule of law, and delivering justice. In this vein, arrangements include an independent judiciary, banking laws and regulations, a centralized Sharia supervisory board, a regulatory Sharia audit, stock exchange rules, and regulations such as listing criteria, and banking and Islamic finance arbitration. Besides the aforementioned stakeholders who play a big role in the monitoring the effectiveness and efficiency of Sharia governance, there are other important stakeholders to consider who are not part of the previous arrangements. So this figure displays the proposed Sharia governance model. Okay, next slide is about Sharia governance system according to IFSB. So, attempts have been made in the past to define and elaborate on Sharia governance. For instance, the IFSB has defined the Sharia governance system as the set of institutional and organizational arrangement through which an IFS or the institution offering Islamic financial service ensures that there is effective independent oversight of Sharia compliance over each of the following structures and processes from issuance of relevant Sharia pronouncements or resolutions, dissemination of information on such Sharia pronouncement resolutions to the operative personnel of the IFS who monitor day-to-day compliance, an internal Sharia compliance review or audit for verifying that Sharia compliance has been satisfied, during which any incident of non-compliance which will be recorded and reported and as far as possible addressed and rectified. And the last one is an annual Sharia compliance review or audit that verifies that the internal Sharia compliance has been appropriately carried out and its findings have been duly noted by the Sharia board. The IFSB also reported that the industry has described the Sharia governance system as structures and processes adopted by stakeholders in the IFSI, from financial regulators to market players to ensure compliance with the Sharia rules and principles. The latter definition used by the industry is arguably more suitable than the qualified definition adopted by the IFSB. The reason being that it is more comprehensive and accurate. The internal arrangements of an Islamic bank, while being fundamental for assessing and contributing to Sharia compliance, are only one part of the complete Sharia governance system. The IFSP definition makes no mention of external arrangements which contribute to the Sharia governance. Moreover, institutional arrangements are mentioned without elaboration of what exactly these arrangements entail. In order for a more holistic understanding of Sharia governance to prevail, it would be advisable for the IFSB to consider revising its definition and expanding it to address the limitation mentioned. So, AIFI's governance standards number 1 to 4 address the Sharia Supervisory Board, Sharia Review, Internal Sharia Review, and the Audit and Governance Committee, while overlooking several aspects in detail earlier. AAOI5 provides some general guidance when it states an IFI must have mechanisms to comply with Sharia in all their financial and other dealings. It also adds that an IFI should establish an effective structure for ensuring Sharia compliance. Such a structure should cover the effectiveness of the role played by BOD, SSB, management, and also auditors insofar as they relate to the Sharia compliance. The term auditors here can be understood to refer to the external auditors. However, close inspection to the standards shows that the term is used in reference to internal auditors, since the internal Sharia review may be carried out by the internal audit department or internal control department. AOI5 recognizes international review as an integral part of the organs of governance. However, in discussing the governance structures of an IFI, AOI5 makes no explicit mention of Sharia governance. So, the IFI structures is that a structure should a structure through which the governance objectives of the IFI are set and the means of attaining those objectives and monitoring performance are determined. Mechanism in place for efficient use of resources and equally to require accountability for the stewardship of resources. And the next is the system by which the IFI is directed and managed while encouraging it to create value, provide accountability, and establish control system that commensurate with risk. The last one is that a system of checks and balance for ensuring that those charged with governance act in the best interest of the IFI stakeholders for producing long-term value to the IFI stakeholders, which maintain the highest standard of ethics and professional confessional conduct. There is a need for AOFI to revisit these structures and explicitly acknowledge Sharia governance as a separate structure. Additionally, as with the IFSB, AOFI needs to adopt a more comprehensive understanding of Sharia governance that extends beyond the boundaries of the institution, because such a holistic understanding is in the best interest of stakeholders and also the industry. Uh, Next, we are going to discuss about a learning objective 2.13, the importance of Sharia governance. Why do we need Sharia governance? Robust Sharia governance is needed to increase the trust and confidence of stakeholders of the Islamic banks. This will help maintain the stability of institutions, the capacity to function as financial intermediaries, and their performance. It will also improve the stakeholders' knowledge and understanding of the laws of Sharia related to transactions. It also allows them to make informed decisions on their relationship with their banks, which makes them in a better position to decide if they want to invest or divest based on timely, accurate, and adequate Sharia disclosures. Moreover, they would also be more capable of of comparing the extent of Sharia compliance of different banks against each other. Such efforts would decrease information asymmetries between managers and stakeholders, also will increase competition and enhance market disciplines. Furthermore, the standardization of practice would largely limit avenues for opportunistic behavior by Islamic banks and their managers, since Sharia non-compliance can shake the public confidence in the credibility of Islamic bank, thereby resulting in fund withdrawals. The next is Learning Objective 2.14 about Sharia supervision versus governance. In differentiating Sharia supervision from governance, we posit that Sharia supervision addresses some elements of the internal and external arrangement that have been discussed earlier, whereas Sharia governance is much broader as it focuses on the whole system in its totality, including the institutional arrangement. While the internal measures play a vital role, other components cannot be ignored, as doing so presents an incomplete system that could result in superficial and questionable Sharia compliance practice. The objective here is a holistic system wherein different organs collaborate to produce the desired effect, not mere box checking. And also that much of a literature to date has focused on the Sharia Supervisory Board. While being of great importance, this entity is one of many parts of the system. Hence, its title is not synonymous with Sharia governance. Nevertheless, it has commonly been portrayed as such. An array of different titles have been used to refer this organ. These titles are the reflection of the different perspectives that authors have on various aspects to this entity, such as its form, reporting structure, and etc. It is, however, important for academics and the industry alike to reach a common understanding of fundamental concepts, such as Sharia governance, in order to prevent substandard practice that negatively impact the development of the industry and to protect the interests of stakeholders. Nevertheless, an element of flexibility is needed to accommodate the unique circumstances and realities of different jurisdictions, as no single model will be suitable for all jurisdictions. The next is about Sharia risk definition in the Learning Objective 2.15. The BCBS or Basel Committee on Banking Supervision defines operational risk as the risk of financial loss or damage resulting from inadequate or failed internal process, people and system, or from external events. This definition includes legal risk but excludes strategic and reputational risk. An operational risk unique to Islamic banks and financial institutions is Sharia risk. This is defined by Wells to be the chance that an Islamic financing transaction is challenged on grounds that it does not comply with Islamic law. Archer and Heron referred to it as Sharia compliance risk then and define it as the risk of non-compliance resulting from a failure of an Islamic bank's internal system and personnel. The IFSB terms it Sharia non-compliance risk and declares that it is the risk that arises from an IIFS failure to comply with the Sharia rules and principles determined by the Sharia board of the IIFS or the relevant body in the jurisdiction in which the IIFS operates. Sharia risk may be defined as the risk of financial losses that an Islamic financial institution may experience as a result of non-compliance in the activities which Sharia perceives as ascertained by the Sharia Supervisory Board or the pertinent authority in the relevant jurisdiction. Non-financial or non-material losses are not included in this definition because we are concerned with quantifying monetary damage. Nevertheless, Muslims believe that the losses on spiritual front will diminish the blessings of God, having a consequential impact on the financial positions of the IFI. However, it is very difficult, if not impossible, to quantify these losses. That said, spiritual blemishes which emerge due to the negligence of those responsible for Sharia governance are worthy to blame. This is the end of Learning Objective 2.15, and the next is going to be explained by my partners.
Okay, thank you, Santi, for the previous explanation. So in here, we are going to discuss further about Sharia risk and its possible implication. Next slide, please. Okay, so the first one is credit risk. If Sharia risk is not managed properly, it may reduce the confidence of stakeholders, which will cause a credit risk. Credit risk occurs when customers are breaching their financial contracts with the Islamic banks. And there are three reasons why customers breach their contracts as follow. The first one is the belief that the contract they had entered has been voided on Sharia grounds. And the second one is non-confidence in the institution practices. And the last reason is about the feeling of being betrayed by the institution. And if the contract is nullified due to Sharia violation, it will lead to unlawful income and the exclusion from the bank's income. And the funds will be proceeded to an account supervised by the SSB or the Sharia Supervisory Board, which will be used by them for charitable purposes. Next slide, please. And the next we have legal and compliance risks. And in here, the BCBS defines legal risk as the possibility that lawsuits, adverse judgment, or contracts that turn out to be unenforceable can disrupt or adversely affect the operation or condition for the bank. And meanwhile, compliance risk is the risk of legal or regulatory sanction, material financial loss, or loss to reputation a bank may suffer as a result of its failure to comply with laws, regulation, rules, related self-regulatory organization standards, and codes of conduct applicable to its banking activities. So to simplify, legal risk related to failure to adhere to contractual obligation and the enforceability of contracts, whereas compliance risk relates to failure to adhere to laws and regulation. And for additional knowledge, the Malaysian Islamic Financial Services Act of 2013 requires to perform the following action if they aware of Sharia non-compliant activity. The first one is they have to immediately notify the central bank, and then they must cease carrying on such non-compliant activity. And the last one is submit a plan for rectifying the situation within 30 days. Next, please. And the next one we have reputational risk. Reputational risk is the potential that adverse publicity regarding a bank's business practices and association, whether accurate or not, will cause a loss of confidence in the integrity of the institution. The activities of bank involve the general public. Therefore, earning and preserving their trust and confidence is crucial for banking success. And they cannot afford to lose their credibility when it comes to abiding by Sharia in their operation and transaction because such credibility is at the core of their business. And then we also have the market risk. When an Islamic banks own investment in stocks and become non-compliant for some reasons, then the bank is under an obligation to liquidate these equities. And market risk occurs at a time when the equities are valued at less than the price of purchase, which lead to losses. And some SSB members permit a limited time period for market condition to improve so that losses can be minimized. Next slide, please. And then in here we have figure 2.4. And this figure shows the previous Sharia risks that have been discussed, which are credit risk, legal and compliance risk, reputational risk, and market risk, along with the possible implication of Sharia risk. So in conclusion, Sharia risk may result in fund withdrawals, higher costs to attract deposits, direct and indirect financial loss, liquidity issues, banks run, bank failure, and financial instability depending on the size of the Islamic banking industry in the country. Next slide, please. Okay, so the next slide is the learning objective of 2.17, which is the Sharia risk, causes, and events. Next, please. So after knowing that the Sharia risk exists, it is crucial to identify events that may cause this risk to occur. And according to the BCBS, there are three internal causes of operational risk, in which are people, internal process, and systems. And one external causes, namely external events, which are going to be discussed in this section. Next, please. Okay, so the first one is the internal causes, which is people. And in here we have fatwa risk. The SSB of an Islamic bank may expose to fatwa risk, which is the possibility that a fatwa is incorrect, vague, or overly complicated. And there are several reasons for a fatwa to be incorrect as follow. The first one is the SSB misreads a situation. It can be the result from insufficiently detailed inquiry or negligence on the part of the SSB. And therefore, coordinated meetings are needed to build an accurate and comprehensive understanding of matters and also issue to correct fatwa. And the issuance of incorrect fatwa and without due consideration should be held liable for bank losses. And the second reason is the misinterpretation by senior executive or other employees, which then mislead the SSB into misunderstanding the situation or product. And the last reason is the SSB has inadequate experience. So although SSB members have well academic backgrounds, having little disciplines of finance, economics, and banking may issue incorrect fatwa due to their unfamiliarity. And additionally, a vague fatwa could result in employees making incorrect assumption and reading fatwa that was not intended by those who issued them. And the lack of clear procedure and overly complicated fatwa will also lead to mistakes in implementation. Next slide, please. So this slide, we are going to talk about the fatwa risk with internal audit function. So internal audit Sharia function may also expose to fatwa risk by issuing fatwa when it should not be doing so. It can be happen when employees and senior executive misunderstand their role and the difference between its role and the role of the SSB. They may be tempted to respond to questionnaires with verbal or written fatwa that is not set by the SSB. And the possible reasons that these employees may exceed the limits of their authority is their ego and also their Sharia backgrounds and years of experience. For instance, an internal Sharia audit head who is arguably qualified to serve on the SSB but doesn't. Next, please. Next slide, please. Okay, so in here we still talking about the internal causes, which is people, but in here we are going to talk about falsification of information. So falsification of information is another example of an event that could lead to Sharia risk. And this has happened especially when the bank's information technology or IT systems does not have Sharia controls that restrict the user from conducting transaction in the required Sharia sequence. For example, a lack of control function will expose the banks to user errors and possible falsification of documentation. And a financing officer who makes such mistake may choose to cover up the error. And thus, Sharia auditors will have a difficulty to track the falsification. And if such falsification is caught, sale contract will be null and void, and the profits will be excluded. And additionally, a collusion between parties from the SSB or Sharia auditors to conceal information may also occur when there is a mistake in a big transaction and employees fear that profits will be lost and they will be disciplined for their wrongdoing. I think that's my explanation about these internal causes of people, and the next material will be explained by my other colleagues. Thank you.
Okay, thank you, Putri, for the explanation. Now we'll continue the internal causes of people. In here, we have guideline violations and products, transactions, legal documentation, or marketing. So violating procedures for transaction would constitute as a breach, but launching a product without SSB approval might lead to their resignation. And in regards to legal documentation, neither the SSB or legal counsel can do without the other party since each scrutinizes documentation from their own frame of reference. Therefore, coordinating is matters between these two entities as it impacts the validity of the contract. And another important dimension is the guidelines of the marketing that regulate the marketing of Islamic banking products and services that have to be agreed with the SSB to prevent criticism and loss. Next. The next is insufficient resources, inadequate training, and negligence. Having insufficient human or financial resource for the internal Sharia audit function may lead to the non-fulfillment or inadequate fulfillment of tasks such as Sharia auditing of transactions, as the team may far exceed the capacity of employees, and several factors that have led to this unfortunate situation. In spite of AAO IFI efforts, Sharia auditing has not yet gained sufficient credibility as a profession and remains undervalued. And the second is clear qualifications for Sharia auditors are yet to emerge. For instance, the SSB members' qualifications are a matter of concern as SSB members with little or no familiarity with finance, economics, and banking might unintentionally issue the incorrect fatwa. And then the inadequate training of employees is also problematic and may result in bank loss. And the last is the bank may also be exposed to unwanted Sharia risks if those performing their duties to do in a negligent manner. Next slide. And then we have miscommunication. This is another possible trigger for Sharia risks, especially when parties speak different languages. The interpretation may be inaccurate and the corresponding judgment can be inaccurate. But hiring a professional interpreter for each meeting or translate every document can be very laborious, time-consuming, and expensive, especially in the case of sukuk contracts, which can easily exceed 100 pages. This is the reason why Sharia Supervisory Board members who are bilingual are in heavy demand. In circumstances where such a jurist is the only person on the SSB with such linguistic capabilities, the jurist may summarize the densely worded contracts and broadly discuss them with fellow members. Should they agree, and then the jurist may task the addressing contextual details on behalf of the others. Then next, please. And this is the lack of segregation of duties. So conflicting duties such as legalization and auditing must not lie within the authority of the same entity, as this opens the door for such an entity to cover up its Sharia mistakes. And the internal Sharia audit function that issues fatwa without SSB precedent can be attempted to cover up its mistakes if at any point it realizes that the SSB has different juristic opinion on the issue. And if this is incorrect fatwa are discovered, then the profits from such transactions should be excluded and those involved questioned and disciplined. The next. And the last internal cause of people is loss of key player and disorganization. The loss of a key internal Sharia audit employee, such as the head of the function, may also result in Sharia risk. This can be the case if the department is dependent on this individual, knowledge has not been preserved, and matters are disorganized. For instance, is fatwa have not been archived, Sharia aspects of process have not been delineated, and knowledge in general has been left largely undocumented. Next. And now we move to the second cause of operational and Sharia risk, which is process. First, we have the unclear process, policies, procedures, and responsibilities. The substandard practices may develop in the event of unclear process, policies, procedures, or responsibilities, thereby opening the door for Sharia violations to occur. And the continuous cyclical examination and amendment of process, policies, and procedures is essential to keep abreast of legal, regulatory, and industry development. Thus, the SSB may have to revisit some of its previously issued guidelines or fatwa in light of these developments and make any necessary modifications. It is also important for this cyclical review to take place to ensure proper integration of newly issued SSB guidelines and fatwa into process, policies, and procedures. Next. The second, we have inadequate internal Sharia governance arrangement or tools. So underestimating the importance of establishing prudent internal Sharia governance arrangement and establishing the structure but fail to ensure that the right tools are used to perform tests translates into inadequate Sharia compliance controls and can have disastrous effects. Thus, the role of the regulatory bodies here should ensure that the banks have established suitable arrangements and are appropriately equipped cannot be overestimated. Next. The third, we have insufficient disclosure and transparency. The stakeholders may not recognize Sharia violation if there is inadequate disclosure or transparency. Hence, Sharia risk may exist yet remain unidentified by stakeholders until it is too late. For instance, until now, many Islamic banks have not posted such documents on their websites, nor they have posted their fatwa. This increases the denseness that surrounds Sharia aspects and can give the impression that the bank is hiding something from the public. And next. And the last, we have an appropriate use of charity account, profit distribution, and segregation of funds. Funds excluded due to the Sharia conventions are pulled in a charity account. And since this account can add up to millions of dollars, it is important for auditors to pay careful attention to the movement on it. And another issue related to account is that the distribution of returns of investment account which are operate on a profit and loss basis. Just using this account under the profit and loss banner and choosing to operate them instead on a fixed interest basis subject the bank to serious Sharia risk. Next. And this is the third cause of operational and Sharia risk, which is systems. On the left side, we have process and systems accounting mismatches, inadequate product modules, poor reporting, and unapproved software. The bank's IT system transaction process and accounting entries should reflect those lists in product manuals, which are approved by the SSB. And then, in checking for end-to-end uniformity, SSB should not limit themselves to scrutinizing the legal documentation of products, but they should also inspect the IT system models that account for and embody transactions. The reason being that accounting entries, system parameters, and other model aspects that may be Sharia non-compliant. And there is also manual inputting of accounting entries due to the inadequacy of the existing banking system. And then for management to proceed the business, it needs SSB's approval of its IT system. And on the right side, we have inexperienced vendor, non-timely support, non-user-friendly system, and system mistakes. If vendors have inadequate experience and do not receive sufficient expert support when developing their modules, this may lead them to develop impermissible system options that can contribute to Sharia risk. Next. And these are the external causes that can lead to Sharia risk. The first is fatwa risk. This is also included in external cause when an Islamic bank chooses not to establish its own SSB, but rather procures the service of a Sharia advisory consulting firm. And the second is inexperienced Sharia advisory firm and conflicts of interest between auditing, consulting, and legalizing duties. And the third is inadequate Sharia governance regulation. This may lead banks to be negligent toward Sharia governance issues, resulting in uncontrolled Sharia risk. And the last is unclear laws and regulations. Next. And the next will be explained by Mutia.
Okay, Zara, thank you for the explanation. So the next is Sharia risk management. Thanks. Internal Sharia control system. So at the bank level, the internal Sharia control system is vital for managing and minimizing Sharia risk through the identification, measurement, evaluation, monitoring, reporting, and controlling of the risk. In this regard, responsibility is to be delegated to qualified persons with clear roles and lines of authority and who are to be held accountable for their actions. This is in line with the BCBS general guidance on managing operational risk through appropriate infrastructure, internal controls, systems and mechanisms, and train competent individuals. Next. And the next is Sharia compliance responsibility of BOD and senior management. Next. So, as part of its duty to oversee risk management, the BOD is responsible for monitoring Sharia risk and having a precise and comprehensive understanding of it, its impact on the bank and its objectives and stakeholders. They are also accountable for establishing an efficient and effective organizational structure for Sharia governance that adequately assesses and manages the Islamic bank's exposure to Sharia risk and ensures compliance of activities with Sharia precepts. Next. So the AAOIFI recommends for Islamic banks what it calls the Audit and Governance Committee to assist the BOD in supervising financial reporting, overseeing, and monitoring Sharia compliance and other essential functions. So the committee should periodically review the efficiency and effectiveness of the internal Sharia control systems and audit functions, as well as the adequacy of Sharia controls. Sharia-related responsibility of the committee could be classified under 4 main domains, which are Sharia reporting, internal Sharia control, internal Sharia audit function, and external Sharia audit. Next. So at this table displays a more detailed account of the activities of the committee. As for example, at the Sharia reporting, which is the monitoring the Sharia reporting process, and for the internal Sharia audit function, which is overseeing the effectiveness and efficiency of the internal Sharia audit function, and for the external Sharia audit function, which is endorsing criteria for appointment of external Sharia audit firm, and as for the internal Sharia control, which is understanding the Sharia risk. Next. So the BOD must also have duties for the Sharia Supervisory Board or SSB. They must ensure that a competent SSB is appointed and recognize the independence of SSB in making its own decision and not try to wrongly influence its resolutions, thereby compromising the SSB's independence and objectivity. And on an annual basis, the BOD should assess the performance of SSB members using the IFSB's suggested performance measures and resolve any issues involving conflicts of interest. However, the BOD may not dismiss any SSB member without the approval of the shareholders and possibly even the regulator. So this measure is meant to protect SSB members from improper BOD influence. And in consultation with the SSB, the BOD should approve all Sharia-related policies and ensure their implementation, which also guarantee that proper mechanisms are in place to escalate objective Sharia-related reports to it in a timely fashion. And that employees not only understand their duty towards Sharia compliance, but can also communicate their Sharia concerns without the fear of losing their jobs. Next. The next is senior management duty. Senior management are responsible for a robust internal Sharia governance as they implement policies and strategies and perform functions mandated by the BOD. And they are also liable for ensuring that the Islamic bank's internal Sharia governance arrangements instituted by the BOD are implemented through processes, proper delegations of responsibilities, sufficient allocation of financial and human resources, and the establishment of an organizational structure. And senior management are also responsible for cultivating a Sharia compliant culture within the organization. In such setting, such compliance are as an overarching requisite for all policies, procedures, and activities that ensures that employees are familiar with Sharia requirements and providing key stakeholders with ongoing Sharia risk training. Next. And in the fourth one is it is also their duty to provide accurate, detailed, and timely disclosure to the SSB and Sharia auditors, which refer to Sharia inquiries and issues to the SSB, verify that SSB directives are carried out, and follow protocol if non-compliant activity is discovered. And finally, management is responsible for following up on concerns and recommendations expressed by the supervisory authorities, the SSB, internal, external, and Sharia auditors. Next. So that's all from me. I'm gonna give this meeting back to my colleague.
Thank you everyone for your attention. That's all from us. And if you have any question, you can just directly contact us. Wassalamualaikum warahmatullahi wabarakatuh.